friends. This is the Cryptonian. We're taking a look at Bitcoin here once again, and there's something interesting in this chart that kind of gives us an idea of what could be happening here with the Bitcoin chart. Now, there's a lot of people thinking that, well, Bitcoin is overpriced and we don't know where this is going, and they're expecting lower prices. Bitcoin currently today, 34,500. And so let's take a look at some historical price action. There are actually a few iterations of prior price action that can tell us where this potentially could be going. And when we take a look at the bear markets, prior bear markets, we see interesting price action, and there's a tool that we can use to tell us where this is going or possibly going. Nothing's guaranteed, of course, but there's a 66% chance of this occurring. And so I'll explain that here in a moment. When we take a look at the bear markets of the past, we take a look at 2013, and 2013 is the first time that we actually see this play out. We see that we have the peak here, and then we had a bear market, and that bear market created a descending diagonal resistance line. That descending diagonal resistance line, I pretty much explained these two lines in the last video, and if you want to go back and look at that, feel free to do that. And that explains kind of, the bull market context and what these lines mean. But in short, there's two lines that are created in the bear market: a descending diagonal line here of resistance, and then a horizontal line. Now, we broke both of these lines here very close together at the same time within a few weeks of each other. Once that occurred, we broke out and we had a small red week of a retest. 1 week, that was it. We retested and then we went right up from there. And by the way, we are, in comparison where we are now in our bull run, we can tell you that we're right here. We just broke out. So after that, we went up. Let's see, how much did we go up from here? Let me check out the percentage increase. So this was pretty modest at this time. We went up about 50%. Now, from that line, not from the bottom, from that line, okay, 50% from the line. So that being said, we went sideways in consolidation after we rose, and then we had a retest. We had a retest of that line, but we did not go below it. I mean, a hair. It was a hair down below, but it's very insignificant. And that was only for 1 week, and then we exploded higher in prices here. So that's very interesting. Now, where did we lose momentum? We actually, from the breakout to this point where we consolidated and even retested here, we can see that we actually went up to the 0.61 Fibonacci. Exactly. When we draw this Fibonacci line over, we see that we hit the Fibonacci 0.618, and this is the 0.618 bear pocket, bear golden pocket, right? This is usually where there's a lot of shorts that take place. So that was in 2013. Then we had a bear market in 2014. The end of 2013 was the peak, and then we had 2014, another bear market. This was extended. Okay, you could argue that 2013 may not have been a bear market, but for all purposes, it does look like there was a mini bear market there. And taking a look at the bear market in 2014, 2014 was definitely an extended bear market. It was more than a year. And when we see the diagonal resistance line that's created, now this is a little bit longer of a time period. Let's pull it up like so. There we go. So when we see the bear market that was created, we found support here at this 50 moving average. This is our diagonal resistance line. Now look at what happened. We actually had a push higher here. This was a local bottom pushing higher here, and we went up to the 0.5 Fibonacci retracement. Now, what occurred was a little bit different. We continued down into an extended bear market. Okay, that would be a little bit different than what we had, but still, this pump reached from this local bottom to the 0.5 Fibonacci level. Okay, and then when we go to 2018, the bear market of 2018, look what occurred. In 2017, we had a top. We went into a bear market, descending prices. It created a descending diagonal resistance line. And look what happened. We actually broke the horizontal line this time, came down, and when we went back up, this is actually more similar to what we are doing now in this cycle. We broke out here. We went up 100%, 98% approximately, and look at the fib level that we hit. Excuse me, let me put this over like so. Move it over correctly. 0.618 Fibonacci. Okay, then we retraced right back to the white line, and we hit that white line. We went below that, but we didn't close too far below that. It was just a hair, and then we went right back up the following week. So that is another Fibonacci 618 target off of that bottom. Okay, so by now you should see a pattern. The pattern is 0.618. That brings us to the cycle that we're in now. This cycle that we're in now, we have two lines: resistance line, diagonal descending resistance line, and horizontal line of support below that, creating the low, the bottom of the market. When we break out above the horizontal line, just like the last bear market, where would the target be? Well, what's interesting is that if we measure out the fib target, like the prior cycles, we can see the fib target of 0.618 brings us right to $47,000. So this rally could bring us to $47,000 before we have a significant extended correction. That being said, if you enter here, you have a 66% chance. Now I'm talking about the iterations before. You have a 66% chance, 70% chance that the price will not break that white line. If it does, it'll be very brief, and it will be bought up very quickly. So that being said, is this really risky to purchase now? In a long-term scenario, in a long-term multi-year investment strategy, no, this is not really going to matter. In a very short-term strategy, it's risky, and nothing is guaranteed. But again, if we repeat the past cycles, we will probably most likely go to $47,000, which is the 0.618 Fibonacci retracement level, before we have some kind of a significant multi-week correction. So it would look something like this, and then we would come back down, possibly to this line and then move back up, or we would go to 47,000, correct down midway, and then move back up, something like that. Or go to 47,000 and then just go sideways for a while, create some type of consolidation structure, support, and then move higher. So this is very interesting. Comment below. Let me know what you think. This is actually not as risky of a place to enter as what most people think, and even myself, what I thought, and taking a look at historical price action, it's not a bad place, especially if you're dollar cost averaging over time. And if you're waiting for a significant pullback, you may not see it. You may not see a significant pullback because we may be hitting 47,000. So there you have it, friends. I just wanted to share this with you. I don't want to make a long video. Shorter videos are better for this type of content, I think. Everyone is busy, so I'll try to keep it short and sweet. And there you have it, $47,000 price target at the 0.618 Fibonacci. This is what I'm expecting on this rally to the upside. So there will be some small pullbacks, small consolidation areas along the way. Nothing goes up straight in a straight line, but on the longer weekly time frame, it will look like it's going up straight or very close to it. So again, nothing's guaranteed, not investment advice. See you next time.